Hello everyone, JackLynn Harris here again with another video. And today I am accompanied by Phil Atwan, who is actually a professional when it comes to 1031 exchanges. I felt like this was a valuable conversation for Phil and I to have and to share with you all because a lot of individuals, especially today, are doing 1031 exchanges, and there are a lot of questions in regards to how you could go about a 1031 exchange and the different options available. So without further ado, Phil, if you could just let the people know who you are, what company you're with, and what you specialize in.
Thanks, Jacqueline, and hi everyone. I'm Phil with Exchange Resources. We are a 1031 tax deferred exchange qualified intermediary on the streets. They call us a facilitator or an accommodator. Basically, all that means is that you want to do a 1031 tax deferred exchange, you're going to have to hire a company like ours that's going to go into escrow with you, set up the exchange before escrow closes. Not like the person who called me today. They called me almost a week after the sale closed. It's too late. A company like ours has to be involved at least a week or two before your sale escrow closes. We set up the exchange with the escrow officer, close the sale, then the federal government, allowing us to hold the funds, allows you to buy another rental or investment property, and then we fund that with the proceeds of your sale.
What happens when you have two partners who decide that they would like to go their separate ways and, you know, whether it be both of them purchasing new property, one choosing to do a go ahead with the capital gains and pay that, and the other deciding to do a 1031. How does this work?
That's a good question. Before you even list and sell your property, if you own with another person, you always should talk to your CPA. Always. Why? Because it depends on who actually owns the title of the property. So for example, Jacqueline, let's say you and I decide to invest together, we buy a piece of property. What's going to determine on the ownership is if your name and my name are going to be on title, or will it be an LLC or some kind of a partnership agreement. Changes everything when you have a partnership, or you have an LLC or an S Corp or a C Corp. And the reason why is because, remember, who can do the exchange? The answer is the name on title, the tax ID of the name on title. So if it's a partnership, that means you and I don't own the property individually. The partnership itself owns the property. So only the partnership can do the 1031 exchange, not us as individuals. So if you want to go your way and I'm going to go my way, whether you pay taxes or I pay taxes or we both pay taxes, that's fine. But if one of us want to exchange, we can't. Because why? We don't own the property. The partnership is the official ownership of the property. Let's not confuse partnership as Jacqueline and I doing business together versus we setting up an official type of ownership that is the partnership, like an LLC, for example, that owns the property. Because the entity that owns the property is the only entity that can sell and do the exchange. And we don't own the property. We just own part of the shares of the partnership.
Right. Okay. So it is important that whoever does the 1031 exchange, you either A, get out of the partnership prior to doing the exchange, or you basically make sure that you have a strategy set up in place with your CPA, and both parties decide how they would like to move forward when it comes to.
Right. And in California, the law is different here than it is in most other states. And it's even different than the federal government. Now, the state of California has to allow you to do a 1031 exchange outside of the state. But the problem is, if you have ownership, like you and I, if we own the property in an LLC as an example, you don't own the property, so who can do the exchange? Well, only the LLC. But what if we want to go separate directions? Then what's entered into this thing is something called a drop and swap or a swap and drop. And that's a very important part when you're working with other people under the auspices, not as tenants in common, but as a partnership. So for example, let's say it's an LLC. You and I have the J&P LLC. I said that because it rhymes, right?
Yes.
So the bottom line is, I bet you can't guess what J&P stands for, right? So anyway, so the bottom line is we own the property, we've owned it for, let's say, 7 years, for example.
Mm-hmm.
We decide to go our own ways, but we own it in an LLC. So we only own shares. You can't do 1031 exchange on shares, only on property. So what would happen, we'd have to do one of two things. We could do something called drop and then swap. What does that mean? That means you and I then, we would talk to our CPA and then we would dissolve the partnership. We would now hold title as tenants in common. If it's 50-50, 60-40, 90-10, doesn't matter. We would hold title as tenants in common. I would have mine either in my trust, or I would create my own LLC, or just in my name. You, same options. We must hold it for 24 months according to California law, 2 years. Then we could sell the property, enter into a sales agreement. You go your way, I go my way, but we have to wait for 24 months, which is a real drag.
Mm-hmm.
But that's a drop. We relinquish the ownership, but into our names as opposed to the partnership, wait for 24 months, and then swap. That means then sell and do the 1031 exchange. But the Franchise Tax Board will nail you or nail me when they find out it was less than 24 months, because they go back and just look at the records, and they can stick it to us and make us pay taxes. So that's not good. That's drop swap. There's another way of doing it. It's called swap and drop. Swap and drop means you and I already have a buyer. We're in escrow, and we're going to close escrow, 2 weeks, a month, whatever. Then what we can do, if we want to go our separate ways and we both want to exchange, we could swap and then drop. That means we set up the exchange with the accommodator. We exchange resources, we'll set up the exchange. We will do the exchange for our property under our LLC. Mm-hmm. And we'll buy 2 properties, one for you, one for me. But the exchanger has to be the LLC, because we didn't drop it 2 years before. The LLC will buy 2 properties, one that you're going to want, one that I'm going to want. Then after the exchange is over, the LLC must keep the ownership of those properties for 24 months. A lot of people think I do this because I'm a big USC fan. But really, the reason why I'm doing it is because it's 24 months.
Okay.
You see all that USC stuff behind me. But the bottom line is that it's got to be for 24 months ownership before we can dissolve the LLC. Then after 24 months, we'll dissolve the minimum. The LLC will dissolve. You will get that property you wanted. I will get my property that I wanted, and we'll still be friends, but we'll go our own separate ways. We swapped, we did the exchange, we held for 24 months, we dropped the title afterwards, and then we both got our own individual properties. So that's the difference between drop and swap versus swap and drop.
Okay, and then both of them require 2 years to do either or. 2 years. Do you know why they're so strict on the 2 years?
Yeah, I'm going to give you right up front. Even though this law applies to California, not to the federal government, because the federal government doesn't say this. We hear a lot of things coming out of the IRS, but they still haven't really proclaimed this. But here's the reason. There's 5 words. And all your listeners would do very well to write down these 5 words, because if you can master these 5 words, your life will change. You ready for this?
I'm ready.
The government wants your money. And that's why they create these things. I don't care what reasons they give you. It gets down to money. Mm-hmm. It gets down to taxes. It gets down to, if you want to be successful, you better do it their way, because they're the ones with the hammer and their hammer is bigger than my hammer, and they're going to crush me for that money. So why? Who knows? Other than they just want the money.
All right, and then Phil, tell them real quick if they can't get to the next video or whatever the case may be, how do they get in contact with you directly?
Yeah. I'm going to give you my phone number. It's area code 213-479-8800. 213-479-8800, or you can go to Exchange Resources right there .net online. And if you do that, you'll see a bunch of information when you go to us and leadership and stuff. I'll be there. But I'm always happy to answer your questions. You know, it's nice to make sure you can talk to a professional who specializes in an area, like a doctor, business, whatever it happens to be. He was to say, with many counselors, you get wise counsel. So the bottom line is, our goal is to give you the counsel for this area, and then you can decide after talking to your CPA what's going to be best for you. We'll give you that information. But JackLynn, thanks for having me here today. It was a real pleasure to be with you.
Thank you as well, Phil. This call was very informative, and we'll be in touch again soon.
Take care.
You too.
Bye-bye.
Bye.